The government has been in charge of the EV market, and clearly, they are not doing a great job with it. The EV market has never been excellent. However, things are about to get worse if the government stays in charge. The automobile industry has gone through a couple of financial disasters. However, this industry just might not be ready for what is to come. You see, politicians are currently in charge of the EV market, and if you are looking to buy one, you might be making the wrong move. A major crash in the EV stock market is looming, and we will learn more about this in a moment. But in the meantime, kindly like and share this video. Also, subscribe to this channel if you are new here. The influence of the political class on the EV market is bad for the stock market and also bad for the middle class. Lots of people are spending money on EVs. However, they have no idea what is happening in the EV world. On the surface, EVs might be great for people interested in the state of the environment and looking to keep it free from harmful emissions. But the fact is, EVs have really not worked for lots of people, and things will not be getting better anytime soon. At the moment, lots of people seem to be exchanging their EVs for gas cars. As bad as this might seem, the EVs that have not been bought are lying untouched in car lots. Due to this, several car manufacturers have made it clear that they are not interested in selling EVs anymore. So what happens to the already produced EVs? Since companies are tired of selling EVs, these cars are left to sit in car lots unattended, and things might remain like this for much longer. There have been several complaints about EVs, and these complaints appear to be increasing as the days go by. The complaints around EVs are more significant than people anticipated. They are both time-wasting and pocket-draining. Some folks have had to spend up to $30,000 fixing battery-related issues. This amount should get you a new car. This is in addition to a monthly insurance expenditure of $500. It is easy to assume the crash of the EV stock market affects only a select few. But the fact is, you could be affected, and it could affect you a lot more than you imagine. Big car manufacturing firms like Tesla, Ford, and GM are affected by the drop in demand for EVs. As much as these firms are well affected, it appears none is as affected as Tesla. The prices of these EVs have dropped. Nonetheless, no one seems to be buying EVs, and they are just packed, waiting for someone to come pick them all up. Right now, if you think there are lots of EVs lying unused in car lots, things are about to get worse. You see, the prices of EVs will drop, and this will not even lead to an increase in the number of EVs purchased, as many people will still be unwilling to get one. The unfortunate situation in the EV industry might not be glaring, as the government is trying to hide things, but the numbers do not lie. Ford might not be the biggest producer of EVs, but they are running at a major loss. For each EV Ford sells, it makes a loss of $36,000. This is so bad. The Ford CEO has suspended the production of EVs until they know how to make gains from these cars. If you think Ford is the only car company that has a major problem with the continued production of EVs, you have no idea what Toyota is going through. Toyota's new CEO is also concerned with the government's position on EVs. The government is keen on reducing the production of gas-powered cars and increasing that of EVs. As much as Toyota's CEO is not uncomfortable with the production of EVs, he is extremely uncomfortable with the government's ban on the production of gas-powered cars and has called for a different approach to the reduction of emissions. It is easy to assume EVs are not doing so well because of the various complications they are associated with. But there is more to their struggle in the market. These cars are very expensive and sell for as much as $65,000. Now, the price tag attached to EVs might not seem like a lot if you have well-developed financial muscles, but expecting the average car user to spend about $65,000 on a car that they have to recharge after driving about 200 miles is asking for too much. If, at this point, you already find the entire situation to be really funny, trust me, you have no idea how bad things are. The government is keen on selling EVs. This means that car manufacturing firms have to produce them. Well, you could say these firms are free to stop producing EVs if this is not something they are interested in. Sadly, it is not as straightforward as you might have assumed. There is a mandate for these car manufacturers to sell EVs. If, for some reason, they are not able to sell a lot of EVs, they have to pay a huge fine. Since these various car firms are not interested in paying these hefty fines, they just have to sell EVs at all costs. While each firm has a different strategy for selling EVs, some have decided to slash these prices. This might not be good for business, but this is something they have to do to sell the right number of cars. On paper, the idea of slashing prices so these EVs can be sold seems smart. However, it has not been as effective as anticipated. Already in just one quarter, Tesla has had to slash the prices of their EVs 3 times. Unfortunately, this has just not yielded the anticipated results. Tesla is currently in a bad place because of how much it has to let go of to sell its EVs. But things could even get much worse. You see, an EV firm in China called BYD is about to get ahead of Tesla in the EV sector. This might seem strange, as Tesla is considered the face of EVs. But it is not as strange, as BYD gets a lot of support from the Chinese government. Tesla CEO Elon Musk has admitted that Tesla could lose its #1 position in the EV market to BYD. This might be a statement of fact. Unfortunately, it worked against Tesla, causing it to be devalued by about $80 billion in about 7 days. This is already bad. But to add salt to the injury, EVs are associated with not-so-great customer reports. Several EV users have complained about them being unsafe. Additionally, it turns out these folks don't consider their EVs reliable. Tesla has lost a great deal of its value because of its involvement in electric vehicles. This is surely a bad place to be. But it is actually in a better place than some other car firms in the United States. One of them is General Motors, which stands at risk of actually shutting down because of how bad things have been. If you did not have an understanding of how bad things are in the EV market, the likely shutdown of General Motors perhaps drives home the point. So how did General Motors get to this position? Well, it might be difficult to state exactly how things got so bad for General Motors. However, this firm had to part with over $750 million in a couple of weeks. If you think Tesla is not making sales, you have no idea what General Motors is dealing with. They have struggled to sell less than 10% of whatever Tesla has sold. The thought of this should help you understand what position General Motors is in. You see, Tesla had to lower prices 3 times to make some sales. This is common knowledge in the EV market. However, regardless of the obvious lack of sales, General Motors CEO has refused to lower prices. It is general knowledge that EVs are expensive, and it is easy to assume they come with a huge price tag because of how complex they are. But they are not only expensive because they are complex. The raw materials needed to produce them play a key role in the price tag attached to them. You see, these vehicles are made with some rare earth minerals. This alone has a major effect on their prices. These minerals are limited in supply, and as they get more scarce, the price of EVs is expected to go up. So, regardless of how you see things, the concept of EVs is a disaster waiting to happen. So, if you were nursing the idea of getting one, you might want to get a gas-powered car. This is where we draw the curtains today. Thanks for going all the way. See you in the next video.